fundsupermart.com.
Hi Charles. Funds with income feature have been popular among investors. Do you see this trend happening on a global scale? And is the hype on income funds sustainable?
Morning, Madeline. Yes, it's a question that's being asked a lot in the market at the moment. I think what's happened is the market's remembered that multiple expansion, such as we saw on a very large scale last year in global markets, over the longest period of time tends to be mean reverting, i.e. it tends to kind of cancel itself out. And that actually the real return that investors earn over the longest period is made up from dividend yield and growth in that dividend yield. And I think in years like last year, 2013, where you get a big period of positive margin growth, margin expansion, then people concentrate on that rather than income. But you're right, this year people have been talking more about income, and I think that's because this year we're unlikely to see the sort of big double-digit market returns that we saw last year. And as such, the dividend growth and the dividend yield portion of the shareholder experience, the shareholder return, will be a larger part of it, a larger part of that shareholder return. So therefore it's more important and more people are focusing on it. But I think that's healthy, and I think that's good, and I think also that's very helpful given the demographics in the world at the moment, with people needing income to fund longer living periods.
Where do you see attractive sources of income?
I think there's a number of sources of income still in the world. In some markets, commentators are saying that perhaps the US has run ahead of itself, that perhaps it's too high. But I think what's interesting in markets is that last year the re-rating that happened was most aggressive re-rating was in the mid and small cap areas of the market. And actually in many markets, the large cap areas of the market suffered or achieved the smallest amount of re-rating. And of course it's in those areas of the market that the yield paying stocks are generally concentrated. So actually this year, you can buy the kind of stocks that give you that yield, but actually they are also the area of the market that genuinely do give you the best chance for some degree of capital appreciation as well. So I think this year you kind of get two for the price of one almost on that area of the market.
Healthy stock market performances from US and Europe made investing in developed equity markets less attractive. Is there limited investment upside in these markets?
Another very good question. I think what you're seeing at the moment is it's very difficult to make any kind of global average in terms of earnings or GDP growth or really anything. I think markets really have desynchronized over the last 18 months. So in the US, you did see margin expansion, multiple expansion last year, but you also saw earnings growth, at least some earnings growth to underpin it. And in Europe, that simply wasn't the case. There was no earnings growth at all last year, really, and the whole of the stock market double-digit advance was really simply down to PE expansion. I think the situation in Asia is also different as well, in that in Asia you're seeing sort of good recovery after this year, after last year into this year, with a lot of people re-entering positively, both developed and emerging Asia at the end of the first quarter. I think in the US, we've talked a bit about the different parts of the US market, but I think a lot of space has been given up to trying to explain away the weak Q1 numbers in terms of what happened with the weather, particularly on the eastern seaboard of the US, with inventory being stuck at the warehouse, things not being able to move around, and basically the economy being snarled up by the weather. And I think the key point that will happen is in Q3 to see whether that really is the explanation for the slowdown, or whether the numbers for Q3 come through and actually surprise on the upside or actually meet their upside targets. Our sense is actually that they will, and that actually there is some further, albeit sort of phase 2 growth still to come into the market. You're not going to see a repeat of the very sharp and fast multiple expansion we saw last year, but nonetheless it doesn't mean that you're going to see markets falling back, I think, even in the US.
From earnings point of view, which regional or single country equity markets do you find most attractive?
I think people concentrate on absolute earnings and tend to not to remember that the market acts as a discount mechanism, i.e. its job is to discount earnings, future earnings, into the current share price. So that means you shouldn't really look at absolute earnings. So for example, in Europe, absolute earnings are low, but then again, absolute earnings expectations aren't actually that high either. Nobody's really expecting Europe earnings to grow very much in the next 12 to 24 months. And actually it wouldn't take very much in Europe, therefore, for earnings to grow, for it to be something of an earnings surprise. You know, an earnings surprise could be called by a relatively mild recovery in earnings there. In the US, some greater earnings would certainly be helpful. In Asia, actually, earnings have been very sustained and have been very good and very strong. Rather than concentrating on that, I think we tend to rather look on things on a global markets basis. So, you know, I think that's one of the benefits of buying into a global income strategy. Because increasingly these days, you know, the very largest companies, i.e. the companies that you're looking for yield, where they are listed, where they are domiciled, is really something of an accident of historical M&A, merger and acquisitions activity. Relatively little of their earnings and operations are in the country where they're listed, and the majority of it is somewhere outside of their listing geography. So I think that looking at investing on a global basis and actually concentrating more on what a company does, where it earns its cash, and then how it deploys its cash is actually much more helpful as an income investor rather than concentrating exclusively on certain regions of the world.
Thank you, Charles.